All right, so this is a quick session to help explain how best to use the Royal Q app and TradingView to time your entry. Want to reduce your floating loss, or want to quickly ensure that you have profitable trades in the safest way possible. So there's a concept you need to understand. The concept is this. Let's look at this example. I gave a signal on hard Saturday by just before midnight, and it delivered 1.5%. So what was looked at in the market? Before I come to that signal, you need to understand something. The market will tell you, will give you fake out moments and take out those who trade with their stop losses. So look at here. So people would have traded here and put their stop losses here. They would have put a sell and their stop loss would be here. Tight stop loss. Now, the moment they put that stop loss, the market goes in their favor. And guess what? The algorithm will take them out. You see, the market went up and took them out, right? Because the market hits the stop loss. When such thing happens, there's a second condition you need to watch out for. Watch out for the moments for the market to go down and take out the next low and the next nearest low. So I'll repeat myself. Once the market has a top and another top that takes out the stop loss on the top, and market pulls back, takes out any near closest low to it. This is a low, it took it out. All right. So there are some people that put stop loss here too and did a buy. The market will wipe them off. Their stop loss means I don't want to lose more than this. So it will take out that loss and make it liquidity for the market. Now the market is going to drop and look for the nearest liquidity point again. So there's a point here. Some people put a stop loss here, right? It will take them out. Now, some people also took buy trades here and here, and they had their stop losses maybe somewhere here. The market will also take them out, right? That's what the market does. For those who trade futures, it will take you out and use your capital as liquidity for the market. So where do we come in? We trade spots. So where do we come in? You want to come into your trade, all right? This is just one of the strategies. You want to scan the market. Look for where there's a higher high that takes out a previous high, close to it, and the market dips significantly enough to also take out a closer place where there's a stop loss. All right. So the closer you are to the stop loss, the more likely you're going to win. All right. So look at what happened here. The market dipped and dipped and dipped and got to this point. When the market got to this point, it had taken out all of these guys. Their stop losses here. Anybody that put buy here and this is stop loss, if they hadn't taken their profit, it was going to come take them out. All right. And once it takes them out, maybe they wanted to take higher profit and all that. Let's say somebody came in here, put his trade here, all right, and wants to get 10%, 6% or whatever, and the market starts retracing. He's going to relax, say, I don't care, let me wait. The market will come here. He puts a stop loss here. The market will come there and take him out, all right? So if you look at the price movement, at this point, the market had taken out anybody with stop loss here. The market also decided to dip again and take out people from this point. The moment this happened, again, I just knew that this is a great move to go into because to the left, there was no other dip that was close by to be taken out. This market had taken out everybody's stop loss here and here. So what was left for the market to do? The market was definitely going to go up. The question is by what percentage? All right. To calculate the percentage, all you have to do is to take your Fibonacci retracement to look at the top, the highest top that's close by, and look for the lowest low. All right. So you can even decide to draw it from here, just to make it narrower, quicker, take profit. All right. So imagine you enter this trade here. You can take 1.5%, 1.4, 1.5% comfortably. And if you want to stretch it to the next line, this is a 3%. But don't be greedy. Just target the first one. Since it's 1.5, that's enough. Take it and get out of the market. As you can see, the market went ahead and delivered up to the next line, which was even a 4%. Okay, so that was how that hard signal went through. Okay, that was how the hard signal went through. Why was it guaranteed? Because I had looked at it. The higher high was taken out by another higher high. So that means if you were thinking of trading here, a sell, I mean, your stop loss was hit, then the market dipped, took out all of these positions here, took out. So when I saw this, I knew it was money in the bank. All right. So even right from here, I would have been tempted. Even right from here, when you took out this point, I would have been tempted to go in, and I would have still been profitable. All right. And the market went against me briefly, then I would still be comfortable with, yeah, just buying the dip a little bit before it goes to profit. All right. So that is the first strategy for the first coin. So let's go look at the next coin of interest. So I gave another signal, which was for Floki, right? So right here, you can see I've switched to Floki. So what happened with Floki, right? Take a look at this point again. This was a high, and the market went ahead and broke the stop order for this high. So people that put a sell and put their stop losses here, the market went, broke the stop losses, took their money as liquidity and dipped. Of course, it dipped and took out anybody that put a stop loss here, took out anybody that put a stop loss here, all right? And the market dipped to this point. In other words, it took out anybody that put a stop loss here. And look at this, KDJ turned green here. So you could have entered here and also made some profit. So timing your entry, 1.5, easy, dusted, okay? And if you want to draw the chart of how you would have taken this 1.5, you can just take your Fibonacci retracement tool, look at the tip, draw it to the bottom, and then take your price to, let's say you entered here. You can see the first point is 1%, 1.07. Yeah, you could have taken that, or you just set to the next point, 2%, 2.5%. Take that, all right? You either target the first one or the second one. I prefer to target the first one when the dip is long enough. But I really, once you don't have up to 1.3 in the first one, you can target the second one, all right? In this case, it gave us up to 2.5. But if the first one had given points. Now, you could have entered this trade here and the market would have collapsed further to take out these points. Should you be worried? No, because from this point, it's just a 5% dip, all right? So nothing to worry about. Remember, for every trading we do, we tolerate 20% dip, 15 to 20% dip tolerance. So that is for this point. But this was not the signal I gave to the team. Look at the signal I gave to the team. The signal was right here. All right, and that was on Friday, 2:15 p.m. What made me take that signal? I looked at it, all right? This was a high, right? This was another high. And the market had cleared that high, cleared the stop losses above that high, okay? And dipped to take out this liquidity at this. So some people would have put stop losses here, right? All right. And here, the market dipped here, dipped here. This is where I love to say, you know, this joke can only be understood by Forex traders, futures traders. The body tells the story, the wicks do the damage, all right? If you love that joke or understand that comment, just type, I understand in the comments of this video. The wicks do the damage, the body tells the story. So look at the damage done by the wicks, right? Right here is the stop loss, somewhere here. The wick just comes a little lower than that and hits the stop loss and then goes to give profit. Super crazy. So I observed this and I observed it again. It tested the same level. Now, as it tested the same level, I said, okay, I think we're good to go. KDJ have shown a green light. And I said, this will definitely give us some profit. Why was I confident? Remember, the market had displaced a high point here and displaced more stop losses. There's also a possibility to have come lower here to wipe this out, all right? These 2 points. The market could have crashed more, or let me not use the word crash, maybe dipped a little bit more here. So what, even if it did that, I won't be bothered because we always trade with 20% dip tolerance. So just 4% difference from where I am and where, that could be. So nothing to worry about. So that's why we entered this trade with confidence. We said, okay, I've cleared enough of this stop losses. It's time to trade. And the market delivered a good 2% instantly. So how do you calculate this profit margin? Again, just go to your Fibonacci tool, look at the highest high that's recent, all right? Or you can take it from here and drop it to the bottom. So remember, we started the trade here. So if we try to target this first line, that would have just given us 0.9%. No. So we targeted the next line, 2.3%. Easy. And we got it. Yeah, some people would have been greedy and want to target the third line, would have gotten 3.6%. But hey, the market could turn around fast. So I either target the first or the second one, and I'm okay. Don't be greedy. That was the trade of Floki. Then there was a third coin that will give signal in the last few hours, near. All right. So let's look at the signal we gave for near. This signal we gave for near yesterday delivered 4%, but we didn't really target 4%. I think we targeted 2%, and it delivered. So what was happening? The same thing happened. Look at right here. There was a high here, and the market pumped, broke the stop loss on that high, and dipped. It dipped, destroyed every stop loss here. There was liquidity here, it took it out. There was liquidity here, it crashed and took it out. There was liquidity here too, it took it out. There was liquidity here, it took it out. So right here, we gave a signal, even on that day, and it delivered. All right? Are you getting the point? But that does not mean that that was the end of the liquidity. There was still liquidity here. It could have crashed to this point, but we're not bothered about that because the difference, just 3% from where we were. So just tolerating the dip, can give you confidence. Even if you decide to crash to here, right? You're still in the game. Why? Let's see. This is 11%. Taking it to this point, 13%. It still covers your 20% dip tolerance. So you don't have to wait until it closes every stop loss area. All you need to know is let it close several of it and touch the lower Bollinger Band with a TGS strategy and quick results. This is how you trade and fast track your results. All right. Now look at it. The same market went up, tested again, and all that. But this was the second signal we gave. Why did we give this signal and not here? Because of course the market was going up, could have made a lot of money. Yes. But we needed to be sure that more stop losses were broken. So what did we wait for? Look here, right here. You see a top, right? You can see this top if you can click on the line tool for you to see the top. There was a top here, there was a top here, right? And this top came and cleared the top. All the stop losses that were here and here, this top came, cleared it up. All right. So this was a top, and the market went down, took out all the stop losses here, and here, up to this point. So you see, the market was clearing people's stop losses, and it could have come down here to clear this. In fact, I was tempted to wait for it to clear this, but it didn't matter because I knew based on price movements and positioning that we could tolerate any further dip. So we entered this trade here. We gave this signal right here. Why? Because it had cleared a lot of the dips, a lot of the stop losses, and KDJ was aligned. Right? KDJ was aligned. And so I told my guys, go in, take this profit. And it could have taken 1.5. But what did we do? We just went to our Fibonacci retracement tool, clicked on the top, and dragged it to the bottom. All right, and we'll say from where we entered, the first marker would have given us 1%, 1.06. But hey, let's go to the second marker. And we could have gotten 1.9. So I think this signal I actually told people to take 1.7. Yeah, the market's over-delivered. Yeah, not to worry, sometimes it over-delivers, but please always don't be greedy. And if I had drawn it from here, I would have been tempted to believe that you could take even straight 2%. All right, but it's better to just take what you can take and get out of the market. So remember, when you start Royal Q, understand how the market works. The TGS strategy is your point of contact. Now, with the TGS strategy, once you understand how it works, you've taken a couple of trades, then you want to step it further by observing how the market breaks the stop losses. Wait for a higher high than the previous high. Then allow the market to come down and break a couple of other stop losses. And once you see that, that on the left, it has cleared a lot of stop loss orders, then you can wait for the next KDJ sign to get into the market. Now, I'm going to show you something else from the Royal Q screen in a bit. All right, so this is the Royal Q screen. The same thing I did now with TradingView, you can do the same thing with the Royal Q screen. All right, so open Jasmy, for example. Let's use an example with Jasmy. Of course, you know the TGS strategy, so I'm not going to have to explain all that again. Here, we see Jasmy on the 15-minute time frame. Now, some people will see this and quickly jump in. But remember, KDJ is pointing down. So you wait. In fact, when the market is dipping and crashing a lot, it's better to wait for it to touch the lower band. But please, with what you learned today, simply observe that the market is going to take out the stop losses here. It's likely going to come close here. Take out as much stop losses here as possible. Then the next place to hunt is here. So apply TGS and with hunting ideology here. So you want to be patient. All right. Now, this market could pump up. I'm not saying it won't pump. It can pump up. But we want you to, sometimes, especially when one or two of your trades are, still trading, the next one you want to use this method to make sure there's enough pullback before you get into the market. All right. So you might want to wait until this stop loss is taken out or this. All right. So the same thing I showed you on the TradingView chart can be, done here. Always look at the left side and see what are the possible stop losses people might have played. People might have placed it here. People might have placed it here. So, it's okay. The market might chase those stop losses and clear them. So you have to be patient. Okay. All right. So, this is also, you can also compare what's happening on the 1 hour chart. You can see on the 1 hour chart, people that are looking at the 1 hour chart are going to want to wait because they expect the market to dip. All right. KDJ is pointing up here. Yes, true. But price at the upper Bollinger Band, so it might want to dip, which is telling you, yes, what we analyze the 15-minute time frame could also be a dip. So you want it to come down a little bit, at least below this point before you enter your trade. And even if the market further dips to hunt this level, your 20% dip tolerance will take care of it. Okay, this is Burger. I thought I was opening Jasmy. All right, so this is Jasmy. All right, excellent. So this is Jasmy now. You can see there was a high that was broken by another high. So the stop loss people here have been taken out. So what you're now waiting for is for the price to dip, and the price has dipped. This point has been taken out here. This point has also been taken out here. And KDJ is now about to say go. All right, or has it said go already? Yeah, almost. Yeah, basically, it has said go. So you can decide to enter this trade. But when you enter this trade, remember, the market could still go ahead and hunt here. So when it's going down, understand that it's going to hunt to take out stop losses. It's not just about you, but your deep tolerance can handle this. And after this point, the next point to hunt is here. And your deep can tolerate it. This is Jasmy, right? So let's look at TradingView and see what Jasmy is showing, just to help you appreciate. All right, so this is Jasmy. This point can be hunted. This point can be hunted. Here can be hunted. So why do you don't need to worry. From this point to this point is 15%, which is okay with your deep tolerance. All right. So you can enter this trade right now and be patient. If you look to the left, honestly, there is no other liquidity to hunt. All right. So this is the lowest this will go, unless it's a serious market crash or something. Honestly, This I think is the lowest this will go. All right. But remember, it's all probability. But the market is going to hunt this. After hunting this, likely it's going to give you some, upward movement, which will definitely be profit. And from here, it can also turn to upward movement, which will be profit. So a Jasmy signal right now is good to go. You can compare it at the 30 minutes. And if I want to draw my parallel channel, just out of curiosity, if I decide to draw my parallel channel out of curiosity, I can tell you it's going to come down somewhere here. So this line is likely going to be haunted. All right. So we're going to see what happens. All right. We're going to see what happens. And I might come back here to tell you if this line gets haunted or not. So this is the idea. Even if you enter your trade here, just understand it will hunt here, and hunt here. Likely, or it could actually just hunt here and deliver profits for you, or even take you straight into profits. Remember the money management strategy. If you have $10,000, you can divide your money into 4 places or 5. If you divide into 4, that means $2,500 per part. You trade with that $2,500 per part for 1 day. If your trade, you can trade 10 trades on the same day. But if your trade, takes more than 24 hours, on the second day, you can activate the second part and you trade. Now, if those 2 trades take more, keep, staying, and maybe the second trade stays up to 24 hours, just wait for 48 hours. All right. Then you start trading before you activate all 4 parts. Using this methodology, please, from the 3rd and 4th part, always wait for pullbacks. Don't be in a hurry to jump in. Always wait for these significant pullbacks after hunting has been done. This will generate top profitable trades for you. This is a skill that we're passing on to the entire energy team and the Royal Q team, because we want you to understand how the market works for you to maximize your profits. Ladies and gentlemen, TGS strategy working super fine. Add your parallel channels to your TGS strategy. Also, add hunting mentality to your TGS strategy, and you'll be good to go. Remember, what we're passing to you is a skill set to help you thrive even when the market goes into the bearish momentum. All right. Thank you very much. I'm going to pause this recording, and I'm going to, see what happens at the end of the next maybe 1 hour or 2 hours. Let's see where this price is going to go to. Thank you very much. All right. So as we did a little bit of analysis earlier, all right, you can see that this asset, it hit this point and came close to this point. All right. It might still go this low. All right. But what we're going to find out is that we have a signal to buy now, because you can see KDJ has given us a green light. Okay. So just understand that it's better to always wait. For some of your trades, there will be so many trades you can take several times in between. For some of your trades, you want to just observe a high and then a high that breaks the stop loss of that high, and that retraces to liquidate the stop losses of 1, 2, or 3 points next to it, and you're gonna see a buy signal. So this is the first green candle, and with KDJ saying we're good to go. You can now go into this trade, and you are prepared to tolerate a dip, even if the market decides to come for this point and this point, and you're good to go because you have more than 15% dip tolerance. So that's it to help you have a more efficient trading.